Hello and welcome. Before we begin, I want to give everyone 30 seconds to get logged in as we expect many attendees for today's webinar. If you're just joining us, we're giving everyone a little bit of time just to get logged in before we begin today's webinar. Okay, hello and welcome to today's webinar, Preparing for PSD3. My name is Jack Halliday and I'll be running today's session. Before I hand over to today's speakers, I'd like to remind all attendees to please engage as much as possible by asking questions. Please message in the chat box if you have any audio or visual issues or questions during the broadcast. I also want to remind you that today's session is being recorded and a full version of the recording will be sent out after the webinar. Without further ado, I'd like to hand over to today's moderator, Jimmie Franklin.
Hello everyone, and thank you very much for being here with us today. We are going to be discussing what the Payment Services Regulation and the PSD3 encompass and address some of the latest developments and questions that hang in the balance almost 2 years on from those original proposals being published. When PSD3 and its counterpart regulation were introduced, it was seen as an evolution, not a revolution, something we heard many people in the European Commission say many times over at literally every conference appearance. And as we progress and issues such as sovereignty and security refuse to go away, it has to be wondered whether this regulation will still be an evolution. Payment sovereignty and security in the EU has recently become central to discussions around PSD3 and in member states as well, such as Sweden and Lithuania, due to issues such as geopolitics, as the bloc seeks to reduce reliance on non-European providers and bolster its strategic autonomy. Meanwhile, issues such as open banking and digital wallets, which could be key components in the future EU payments landscape, are also high on the agenda. But before we get started on what should be a very interesting discussion, I wanted to give you all a bit of an introduction of what we do at Vixio. We are a RegTech company offering independent, authoritative, and actionable regulatory intelligence for compliance, regulatory strategy, and development professionals. We help you understand the impact and opportunities for your business so you can stay on top of the regulatory change to meet your obligations and identify growth opportunities. And as for me, I'm Jimmie, and I work as a senior journalist on Vixio's editorial team, predominantly covering the UK and the EU. And as I'm sure you can imagine, PSD3 and PSR have been keeping me busy over the last few years, as well as a plethora of other subjects, which I'm sure we'll come across today, such as the Open Finance Framework, Digital Euro, SPA, and the European Payments Initiative as well, or EPI, as it's abbreviated to. So I'll now pass over to our esteemed speakers, both of which are very much people in the know in payments. So Scott, how about you first?
Sure. So hi, I'm Scott. It's always painful to hear that you're a senior speaker. It makes me feel kind of old, but like. So I'm Scott. I'm a lawyer at a law firm called Bird & Bird, where I specialize in financial services regulations, and in particular payments services regulations. Very happy to be here with you guys.
Brilliant. Thank you.
My name is Kjeld Herman. I'm one of the founding partners at Payloom. We are a consulting firm specialized in payments and fraud prevention, whether it's strategy to digital transformation, kind of a end-to-end support when it comes to payments. And thank you for having me here as well.
Brilliant. So starting off, I think it'd be really good to discuss sovereignty. And I suppose, why has sovereignty become such a big issue for payments in the EU? And how does this impact the PSD3 and PSR legislation? Do you know which one of you wants to take that?
Maybe I can set the context a little bit. Well, I mean, no one does payments for fun, right? Payments are the foundation to our economy. It's what we need to do transactions between businesses, between individuals. If we can't do payments, we can't do business anymore. So it really is the foundation to the way that our economy operates. Now, today, if we see how that works, we're very reliant on foreign players, right? Mainly Visa and MasterCard. Although there are today a number of domestic wallets, domestic card schemes, things like that. Most of the time, as soon as you cross a border, you're dependent on these US giants. Now, due to the latest geopolitical tensions, I think this has become more of an issue. We see that if we're looking at East, right? Energy independence has become a very hot topic. If we're looking at the West, payments independence is a very big topic. So I think there's an absolute need for us to be independent and not able to be influenced by foreign geopolitical factors that can use payments as a bargaining chip when it comes to trade discussions or whatnot.
Yeah. I mean, obviously, the topic of sovereignty is a big topic at the moment, not only in the payment sector, quite frankly, but including also in the payment sector. To Kjell's point, I think that payments have been basically a geopolitical issue for a number of years already. Two examples come to mind. One, all the buzz that went around MasterCard, Visa, PayPal, and others back in 2010, 2011, terminating WikiLeaks, which I remember creating a lot of issues back then. Of course, the invasion of Crimea by Russia back in 2014, 2015, I think it was, when MasterCard, Visa, and other providers were told to stop their operations in Russia, which triggered actually Croatia, the creation of a domestic scheme in Russia. Those are, I mean, clear examples of the geopolitical side of payments, if you like. And when it comes to the EU specifically, EU sovereignty, etc., then frankly, it is not a new theme, but it's a theme that has just inflated over the years. And I think now that, you know, it's a big fat balloon, because the creation of EU sovereignty, EU independence when it comes to payments is something that we talked about probably since 2010, 2011. I remember back in the days, Project Money, which was about the creation of a European Visa or European MasterCard, which of course never happened for a number of reasons, including, quite frankly, the lack of legal certainty on the business model, i.e. the legality of interchange fees back then, and if so, at what level. But since then, we've seen a number of initiatives that are all about more EU sovereignty. So if you just look at PSD2, the open banking provisions, more specifically the PIS provisions, the initiation of payments provisions, that is about having more competition, yes, but also more competition against card payments, in particular more competition against MasterCard and Visa. So arguably open banking was already part of the EU sovereignty agenda. The instant payments regulation that was adopted last year, that is also about having instant payments, the new normal in Europe. And instant payments is seen as a European way of paying as opposed to a non-European way of paying. So also part of their agenda. You mentioned the EPI initiative, i.e. the old Pepsi initiative. That was very quickly rebranded EP or EPI. That is obviously part of the EU sovereignty agenda. The digital euro proposal, EU sovereignty agenda. The discussions at the EMSA. I can't remember what EMSA stands for, to be quite honest, but this Association of Mobile Payments, these mobile payment service providers. So it is not a new theme, but a theme that is accelerating, inflating, absolutely. So and it's probably at its height now. So it's probably now or in the near future that we'll see whether this is finally going to happen in Europe or not, I guess.
Yeah, absolutely. And out of interest, would you say that with Wero, has it progressed further than previous iterations? Because I remember hearing about Project Money a few years ago, and it seems like there is a bit more momentum. There also seems to be more mobile solutions out there, like EMSA. I don't know if either of you can take this, but how do we bring those together? Is that a necessity to this sovereignty issue?
Yeah, that's a great question, Jimmie. So if we think about Wero and where they stand today, they're a lot further than any previous initiatives due to their approach. And the approach of Wero has been to integrate existing domestic systems, right? Rather than starting to build something from zero. In the Netherlands, they're integrating Ideal. In Belgium and Luxembourg, they're integrating Payconic. In Germany, well, there are existing solutions, but that are still in the starting block. So they're starting a little bit more from scratch. And then in France, they've integrated Paylib. Now they've done that all under one company, one brand, and that's starting to get some nice traction. Next to that, you had what Scott mentioned, EMSA, right? All these different domestic schemes that have built up serious brand equity already. So think about Bithum, which has 90-something% penetration in Spain. You have MBWay Pay in Portugal. lot of these domestic systems that are looking at interoperability. And then in the Nordics, of course, we have kind of a hybrid between the two, where you have Vipps, Swish, and GiroPay, I believe they're called, but that have kind of consolidated when it comes to a company and a technology level, but where the individual brands are still existing in each of the countries. So we see different approaches to mobile wallets, where we've gone from purely domestic solutions to regional solutions. And now those regional solutions are building interoperability. And a lot of that has been done through the work being done by EMSA. Now, there was one notable exception to that, which was Wero. Wero was more of a you're in or you're out approach, right? You either join us or you don't. And we're going to build our own ecosystem, which has its advantages, right? Payments in the end is an economies of scale business. So if you can consolidate those volumes, then you can get those economies of scale, and you can start to get some of the benefits back to merchants, back to your shareholders, and so on and so forth. On the other hand, it can be more challenging because you have to do away with your existing brand equity, which is quite painful if that's already something that you've spent a lot of time developing. So it's and you have less capability of catering to domestic needs, because let's not forget, Europe isn't a single payment market, right? Yeah. There's a lot of different payment markets, and think about Germany, where, for example, privacy is a big deal, where in other countries there are different market practices. And now, very interestingly, this was last week that Wero announced that they would open that door to interoperability as well. So where before we were talking about wallet wars, I think we're starting to find a ceasefire in those wallet wars currently, and where we're looking at building a pan-European solution, because I think, Scott, as you mentioned as well, right? It's becoming an urgent agenda topic. It's not just this beautiful idea of being sovereign and it's something we should strive for. No, it's the foundational assumptions that we had in our globalized market, that we could rely on others for defense, that we could rely on others for energy, that we could rely on others for payments, have been fundamentally challenged these last months.
Yeah. As a consumer living in Belgium, I must say I'm quite surprised by the number of times I've come across Wero over the last few weeks and months. Quite frankly, I think in my personal case, I think I got a push notification in my banking app maybe 6 months ago or something, saying essentially, hey, would you like to test out Wero? And I clicked yes, of course, as a payments nerd, just to see what it was like. And since then, every time I generated a QR code for a friend to reimburse me, for example, then it's always been a Wero QR code. And same thing with a lot of friends at the moment, generate QR codes when I owe them money, after a restaurant or, a game of paddle, or whatever it might be. Then it is actually a Wero QR code. Actually went to the doctor's yesterday. He generated a Wero QR code for me to pay him. So I've come across Wero a lot, I must say, over the last 6 months or so. So it seems to be growing pretty quickly.
Absolutely. And maybe a last thing to add to that, mobile wallets take a very long time to develop and to bring to market, right? You're talking about at least 10 years to bring a solution to market typically. And why is it so difficult? Because it is very difficult to get payment service users to change their payment habits. An analogy I can give is with contactless payments. It used to be all the time you'd go to the supermarket and you see people with contactless enabled cards still putting their card in the terminal, putting their PIN in and paying that way. It's only when COVID hit and there was a very compelling reason not to touch that terminal anymore that people said, hey, actually, we can pay contactless as well, right? We raised the limits a little bit. That certainly had a role as well. But it was only when there was a really compelling value proposition to change the way that you do payments that people did that. And I think right now we're in a unique time and space in which having a European payment solution is a compelling value proposition for many people. And we see that the messaging associated to many of these European wallets is also focusing on it being a European solution as key differentiating factor with respect to the card schemes. Because let's face it, the card schemes have a great payment product. Right? They've spent decades developing this, refining it. We have chargeback functionality. It's accepted globally. it's a great product. So what's that unique value proposition? One of them is that it's European. And I don't think it's ever been as compelling to have a European solution as it has been today. So we have this unique window of opportunity. And I think PSD3 is going to help, promote that window and open the doors to seize the moment.
Yeah, and speaking of potential European solutions, open banking, considering a pretty lackluster rollout so far in Europe, is there a chance that open banking uptake could improve under PSD3? One of the things that really stood out to me, certainly when it was originally proposed, was that enforcement was seeming to become stricter through the legislation that the Commission was proposing. So, do you think that open banking could become a more competitive European payment solution? And also, could the instant payments regulation help with any of this?
Okay. Do you want me to give that a try, Kjeld?
So I think we might have some different opinions there. So why don't you?
Okay. Well, great. Even better. So I think it's fair to say that open banking, according to the Commission, in particular the European Commission, has not been the success yet that the Commission was hoping it to be. Open banking was meant to be an alternative way of paying versus the card schemes, in particular the US card scheme. So again, it's tied to the EU sovereignty point. It was also supposed to be cheaper, frankly, than card-based payments as well. Although at the same time, the Commission proposed or actually adopted the PS2 provisions on open banking. At the same time, it capped the interchange fees through the interchange fee regulation on cards. So at the same time, you're trying to encourage something that is cheaper than cards, but normally you should be reducing the price of card-based payments for merchants by capping the interchange fees on card-based payments. So maybe there was a bit of a tension there, which maybe is part of the problem. I'm not sure. So it's fair to say that the PIS provisions, the payments initiation provisions of open banking in particular, again, according to the Commission, I think, have not been the success the Commission expects it to be. PSR, or the PSR proposal at this stage, is meant to give a bit of a boost, if you like, to open banking as we know it today under PSD2, by allowing new features under open banking, but essentially forcing the banks that maintain the payment accounts to offer more features in terms of how it can initiate payments with certain frequencies, etc., etc. So more features to make it more compelling for payers, potentially for merchants, for the payees. But I think it's fair to say that one big issue that I know the PISPs have been complaining a lot is the fact that if a merchant accepts a card-based payment today, he doesn't get the money immediately. What he gets is a payment guarantee. He gets that certainty that he's going to be paid. Yes, it is, of course, subject to the chargeback regime that Kjeld referred to, etc. So on occasion, he may need to send the money back to the card issuer, sure. But normally what he gets is that payment guarantee that he will definitely be paid by the card issuer, whether it's tomorrow or the day after tomorrow or this afternoon. But he gets that. Whereas PISPs have been complaining that because of the open banking regime today, they cannot offer a payment guarantee to the merchant, because all they get from the banks that maintain the payment accounts from which the payment gets initiated, the credit transfer gets initiated, is the confirmation that the bank is initiating the payment, but they get no information on the actual execution of the payment. And because they don't have that visibility on the actual execution of the payment, they can't commit vis-a-vis the merchant that the merchant will effectively get paid. And I've heard a lot of PISPs saying, because of that, then we've got a problem and we can't really compete with card-based payments. So the PSR proposal, I think, is trying to fix that too by telling the so-called ASPSPs, so the bank that maintains the payment account of the payer, you not only have to provide to the PISP information on the initiation of the payment, but also you have to provide regular information on the proper execution of the payment in order to allow the PISP to give that payment guarantee to the merchant, which should, in theory, should allow them to be more competitive vis-a-vis cards and therefore arguably be more successful in the future. And of course, that's one dimension, but as you mentioned also, Jimmie, is that combination of the open banking provisions and the instant payments regulation, because maybe even better than a payment guarantee is saying, well, the payment I'm initiating now will land on your account in 10 seconds. So before that consumer checks out from your website or before he checks out from your shop in a physical context, you get the money first, and then you hand over the goods and the services depending on the context. So maybe even better than the payment guarantee is you get the money first, then you deliver the goods or the services. So the combination of these two things, the open banking provisions and instant payments, should, in theory, make open banking more successful in the future. That's the theory, at least. Will it work in practice or not? Maybe that's where, I should leave the floor to Gerd, because I'm only the lawyer in the room after all.
Yeah, so I'm sure I'll catch some flack about this, but I'm not a huge believer in open banking, to be honest. So I think, contrary to what the institutions might think, I actually think open banking has been a big success for payment service users in Europe. Now, not because of the volume of transactions that's being done, but think about your mobile banking app that you have today compared to what it was like before PSD2.
Yeah.
Why? Because you didn't have a choice, right? And all of a sudden we had open banking, and banks realized, hold on, we better improve this user experience, or we'll simply become the plumbing, and payments will do their everyday banking, and the user interface will be taken up by fintechs. So I think rather than it having been a huge success in, say, open banking, it's the stick of open banking that has caused the industry to move forward. So in that sense, I believe open banking has been successful. So when it comes to user interface and things like that, big success. Where it hasn't been successful is in the second use case, and the one that we've largely been talking about now, which is a way to flip around a credit transfer. Because if we think about open banking, it's about payment initiation, right? Why do we need payment initiation? Well, it's because typically transactions in an e-commerce context or point of sales context are initiated by the creditor, whereas the payment instrument itself is initiated by the debtor. So what payment initiation services allow through open banking are for the creditor to provide the data upfront and in an easy and transparent way for the payer. So they simply have to click on something to authorize the transaction for that transaction to then be executed as a credit transfer. Now, in reality, what have we seen? How has that user experience been? Well, it's been pretty poor, right? There's no value proposition necessarily for banks either, right? They're not getting remunerated for this on the issuing side, whereas on the card business, they're at least getting some interchange for this. So actually, they're losing money. They'd rather get the interchange from a card transaction rather than have to execute a payment basically free of charge. So that's one challenge. There's been no remuneration model. Now, SPA, another EPC scheme, was looking at this remuneration model, putting that in place. Again, that we've seen limited success. And I think until we have a comprehensive and efficient strong customer authentication process that's in place for open banking, it's going to be difficult for that to compete with other solutions, wallet solutions, such as Apple Pay, Google Pay, PayPal, and so on and so forth, where that experience is actually much slicker, less clicks, more reliance on biometrics, right? The open banking experience is very touch and go, and it can depend very much on which bank you have and whatnot, but overall the experience isn't great. Now, in the end, open banking, as I said, sorry, just to finish off, open banking is about allowing the creditor to initiate that transaction. We don't just have open banking that allows for that. It's fundamentally what solutions like Wero and these mobile wallets are providing, right? It's QR codes or even NFC now with the opening of the Apple chip for that as well. Yeah. NFC-enabled transactions to do that same thing. We have request to pay, which in a B2B context is starting to get traction as well now. And as I said earlier, payments is a game of volume, right? So is there room in the market for request to pay plus open banking plus these wallet solutions? I'm not sure. And I think banks and merchants are kind of hesitant, waiting to see which one's going to be the winner before they go all in on whatever that scheme might be. And I don't think open banking has the keys in hand to be that winner. My bet's on another horse.
I think that it has, there's some use cases where it has gone well in the UK, and I think people are using it a bit more. And I suppose, do you think that the EU needs to implement something like the CMA9 in the UK? I don't know if that's too much of a UK question for people who are in Brussels, but I wonder whether that's something that needs to happen for it to be a bit more of a success in the EU, because it doesn't seem like the standards are there that were there for open banking from the start in the UK, where it's technically or arguably been a bit more successful so far?
It's been a long issue whether or not the EU in the PSD2 text or in the level 2 text, in an RTS or whatever, should be imposing one standard, i.e. all ASPSPs in Europe should be using that standard to give access to the TPPs, in particular to the PISPs, because of course, the PISPs have been complaining about the quality of the interfaces that were provided by the ASPSPs to access the payment accounts. They continue to complain about those. You mentioned before, Jimmie, that one of the provisions in the PSR is to give more teeth to the local regulators to go after those ASPSPs that do not provide a good quality interface for the TPPs to access the payment accounts. And it's been a debate whether or not in the PSR proposal we should do what we haven't done in PSD2, which is to impose one standard, i.e. all 4,000 or 40,000, whatever it might be. I'm not even sure what the figure is. Let's say 4,000. All 1,000 ASPSPs in Europe should use the same interface. And then you pick one, whether it's the Berlin Group interface or the STET interface or the CIA interface or the Polish API or the Czech API interface. You pick one, or the UK banking interface, although I'm not sure that would be too popular in the EU, but who knows? So pick one and force all ASPSPs to comply with that. So that was in the cards, I think, at some point, but very quickly the EU decided, no, it's not our job to impose standards. All we have to say is, look, it needs to be of good quality. It needs to be at this level of operations, of uptown, etc. But we should not be dictating which standards for a number of reasons. But frankly, one of them, well, two of them, I would say at least, is at least one, to allow for competition between the standards, and two, because it takes a long time to revise regulations, level 1 text, level 2 text. And if we pick one standard now, frankly, it might be outdated or outperformed by something so much better in 6 months, 9 months, or 2 years. And then it might take us 4 years to amend again that piece of legislation. And then it serves no purpose and is actually counterproductive. So for these reasons, I think amongst others, decided not to impose a standard a la UK open banking, if you like. So that's not in the cards at the moment for the UK PSR. So ASPSPs will still have a choice to pick a standard and a declination of that standard, because they might be using the Berlin Group standard, but that doesn't mean they all have the exact same APIs for the access. It's just a standard that they then customize to their own technology. So there are different flavors, if you like, of the open banking, but of the Berlin Group standards get implemented, for example, differently by different ASPSPs as well. So it is quite complicated for TPPs on occasion to get access to payment accounts. That is a fact, I think, which has allowed, frankly, for some business to develop. I.e., some companies have said, well, I'm not going to be a PISP or an AISP, but I can be that technical person that can speak to all those different APIs that the banks expose, the 4,000 banks, for example, that they expose in Europe, and I can help you consume those APIs that the banks have, for example. So to some extent, this diversity in the standard has allowed for new businesses to emerge, those so-called integrators or aggregators, whatever you call them. So those middlemen between the PISPs, AISPs, and the ASPSPs. But is that going to be fixed from one day to the next with PSD, with the PSR proposal now? Tricky, I think.
It will take time, for sure. And going on to the next question, it would be good to know a bit about, card schemes seem to be another area that are potentially going to see some changes through the PSR and PSD3. Certainly in the UK, our payment systems regulator has put out some work recently suggesting they want some interventions here. But considering also recent council papers that have been circulating and MEP interventions in Brussels, should we also expect new rules for card schemes in this legislation? And how easy would it be to bring this about in the text, considering that it wasn't in the draft?
Scott, you want to take this one?
You want to go ahead, Ken? Yeah, I'm happy to. I'm happy to start. Yes, so obviously, yes, the card schemes are being scrutinized. That's an understatement, I think. Yes, definitely, the UK PSR has been looking at interchange. Yes, they've been looking at the so-called scheme fees and processing fees. There's actually a consultation that is ongoing at the moment in the UK to test some proposed measures that the PSR would like to impose on the card schemes to force them to provide more transparency, in particular, on how they set their scheme fees and their processing fees, to give some heads up before new scheme fees and processing fees get introduced, to have more understanding of the reasons why new scheme fees are being introduced or some existing scheme fees are being increased, etc. So that's our debate in the UK, absolutely. And as you mentioned, GB, it is a debate that is now being introduced into the PSR proposal. In the original draft from the Commission from June 2023, I think it was, there was nothing on that topic, but correct, some amendments are now being proposed to force the card schemes to provide more transparency. The increase in the scheme fees, i.e. new scheme fees, or increasing in existing scheme fees, is a hot topic in the EU too. A lot of merchants and merchant associations like Eurocommerce, for example, have been arguing that some of the expected benefits that were supposed to come from the IPR, from the IFR, sorry, not the IPR, the IFR, so the interchange fee regulation, have not really materialized, because on the one hand, the interchange fees have been going down, but the scheme fees have been going up. And so some merchants are arguing that they pay now even more post IFR than they did pre IFR, which of course was not the intention, if that is true. So it is a debate now, absolutely. So some of the papers I've seen propose to force the card schemes to provide more transparency. So very similar to the UK measures, but essentially shorter, in just one or two articles in the PSR text. So to force the card scheme to provide more transparency on new scheme fees, new processing fees, and for the Commission to monitor that by publishing regular reports as to what they see in terms of new fees being introduced, new justifications for the fees, more transparency, and so on and so forth. So definitely a hot topic at the moment. And actually, I've seen another paper that you shared with me, actually, Jimmie, where somebody was proposing to, at some point, revise the interchange fee regulation to potentially set caps, so actual caps on the levels of scheme fees that the card schemes can charge to their customers, in particular to their acquiring customers, so to the acquirers, of course, which is the key issue here. So yes, very much a hot topic, absolutely, in the EU as well as in the UK.
And on my side, it seemed like a terrible idea to further cap interchange fees and even scheme fees. Why is that? Because merchants today are already relatively in a good place in Europe, right? We pay relatively low fees if we compare it to global standards, which is great for payment service users. I mean, we have the luxury of not paying a lot for our payments as an overall industry cost. However, for the industry, it's bad news. Revenues are somewhat limited. Well, we want to develop these domestic solutions. We want Wero, we want all these domestic walls to develop. And part of that is being able to undercut the existing pricing structure associated to card payments. So if you're going to cap that further, you're going to make the business case for domestic solutions to develop even more difficult to make. So I think right now it's probably the worst thing that Europe could do if we want these domestic solutions to thrive, is to further chip away at the revenues that are potentially possible in that market, especially because, I mean, if it's commoditized, if it's all about low cost, who wins? It's the ones that have scale. And the European solutions as of today don't have a scale near comparable to, let's say, the card scheme. So that's a losing battle.
Interesting. You've managed to offend the open banking community and the merchants today. So.
I'm doing my best.
And do we see digital wallets as another area that could be likely to face more scrutiny? And what could this look like if it was to happen? Because I think digital wallets is certainly an area that seems to have taken off since PSD2. And I think, if anything, it was kind of unfortunate how PSD2 passed as they were starting to, I don't know, gain traction, let's say. So it is something we should be keeping an eye out for as well in PSD3 and PSR.
Absolutely. And I think that's one of the key developments that we've seen since some of the early drafts of PSD3, PSR, and the digital euro legislation as well, is that there has been huge development when it comes to these digital wallets, and we see that uptake has seriously come a long way in a number of European countries. So now we sense that certainly on Parliament level, they are very keen to continue to give the private market space to develop, and they don't want to take away that oxygen by limiting revenues or having a digital euro that's going to potentially again be an artificially deflated pricing, if you will, when it comes to retail payments. So I think that's a key one. When the commission was, I spoke to someone from the commission yesterday, and they did say that they do see PSD3, PSR as a potential way, in combination with instant payments regulation, to improve the uptake of instant payments or these wallet-based solutions at the point of sales. But we'll have to see exactly how that will materialize. I know one of the things that the industry is also lobbying for, and that's starting to get some traction, is regarding variable payments and kind of the SCA things related to variable payments. Say, a Netflix subscription or Spotify subscription, where that price might change over time, that you wouldn't have to apply SCA every time, which would improve that uptake again of these European methods where, with a card payment, we wouldn't have to worry about any of that.
Is that taking off in the EU as well then? Because VRPs have been huge. Well, they've been like a big policy point in the UK. They haven't necessarily taken off the market yet, but is that something we're also seeing in the EU at the moment?
It's a call I've heard from a number of the mobile wallet providers to actually provide some more flexibility for SCA when it comes to variable recurring payments. Because as you said, it's been a success in the UK, right? And if you want to have a solution that's going to compete with card schemes, it's got to be at least as good as card schemes. And card schemes have variable recurring payments without without a lot of that friction associated to that. So we should have something equivalent in a mobile wallet context.
Interesting. Nice.
I mean, on this point of SCA, of course, there is, from a legal point of view at least, I'm not sure, from a technical point of view, how easy or difficult it is to implement, but there is a possibility to avoid SCA on those transactions, which is to whitelist the merchant, i.e. for me to say, every time I do a payment to, for example, Spotify or to Netflix, that merchant is whitelisted, and therefore those payments do not require SCA. There's an exemption that is available to the payer's PSP to avoid SCA on those transactions. All it requires is for me to do a one-off SCA when I add that merchant to the whitelist, or when I remove that merchant from the whitelist. So once I've done that one-off SCA to add the merchant to the whitelist, then all future payments to that merchant do not require SCA anymore. And that's an exemption that the payer's PSP can actually leverage to avoid SCA. That's the legal position. Now, I'm not sure in practice how easy or difficult it is to actually implement, but
the payer's PSP has no incentive to do this, right? So some payer PSPs do provide the option easily at checkout to whitelist a merchant, but that's not ubiquitous at all, right? Because there's, again, no incentive for the payer's PSP to implement this. To the contrary, it eats away from their existing revenue streams.
Right. So to actually come back to your question on the wallets, yes, absolutely. There is also a proposal on that I've seen recently, which is to say, well, look, those digital wallets, so in practice, the Apple Pays, the Google Pays, not only, are not currently subject to any kind of supervision, with one exception, which is the PISA framework. So the ECB's PISA framework, which provide for some oversight on schemes and so-called arrangements. And if you're big enough as a digital wallet, you probably qualify as one of those arrangements, which can be subject to oversight under the PISA framework. But other than that, you're not regulated under PSD2. If you provide a stage wallet or pass-through wallet like Apple Pay or Google Pay, you normally qualify as a technical service provider under PSD2, which means you're not regulated. You don't need to have a PSD2 license to provide your services. You're not issuing a payment instrument, for example. You're just basically a secured container in which the payer can store his payment instruments, his Visa cards, MasterCard card, his carte bancaire card, whatever it might be. And then the transactions take place through that wallet. Of course, it ties to the EU sovereignty point that we started with, which is if I walk into a shop now, it's quite likely that I'll be using a MasterCard card, a Visa card. That's the first American brand. And I'll be paying through the Apple Pay or the Google Pay wallet. That's the second American brand. I'll be paying with Apple Pay or with Google Pay. So it ties, of course, to the EU sovereignty agenda. So the proposal I've seen is to have not to force those wallets to get a PSD2 license, but to at least have some notification requirements and some reporting requirements vis-a-vis the national regulators. So what I've seen is, if, for example, I'm Apple Pay, I have to notify the local regulators in the EU member states that I actually do have activities in that particular country, i.e. there are MasterCard, Visa transactions, whatever it might be, that go through my wallet in that particular country. That's the first thing. And second, that on a regular basis, I think it's annually, I would have to report the volumes of those transactions that are going through my wallet. And also I would have to provide essentially data on the fraud that is happening, because fraud is obviously a big topic. We're trying to capture fraud, to see how big it is, and to reduce fraud, of course, through a variety of different measures. So it would be a requirement for for wallets. So I don't think they make a difference between stage or pass-through wallet, for digital wallets to report on fraud, so that national regulators get some visibility on fraud levels from those guys. So it's not forcing them to get a PSD2 license, but it's at least for the first time, as far as I'm aware, except PISA framework, to impose some legal measures, if you like, some legal obligations on those wallets, particularly those US wallets that I mentioned.
So interestingly, Payloom is actually currently working with a central bank of another G20 economy where exactly the same discussion is taking place currently. How should we be looking at these wallet providers? Because in the end, they're only providing a technical interface between a user and a payer, right? They're not involved in the payment itself. And where do you draw that line? Right? If I'm doing a payment, every single mobile payment I'm doing, well, it's being done through my Samsung handset, right? Does Samsung need to be subjected to that as well? We don't produce any handsets in Europe at all. So there's a sovereignty issue there as well. If I'm doing online banking, well, I might do that through my Safari browser, like that. Safari, how about Firefox? Are these guys involved in the payment chain as well? So it's very hard to kind of set the barriers of who's exactly involved in those payment operations and how should they be regulated. Although certainly if we look at the global wallets like Google Wallet, Apple Wallet, they're so prominent in this landscape that just having them outside of any regulation seems like a massive blind spot that's developing or could be developing.
Yeah.
It's actually tied to another provision, which was there, by the way, since the beginning, but as far as I'm aware, it's still being debated at the moment. Which is when I use my mobile phone to make a payment, very often it's not my PSP, so the payer's PSP, to use legal jargon, who's necessarily doing the SCA on me on every payment. It's actually that SCA to some extent is being delegated to somebody else, and that somebody else can be Apple, or can be the operator of the operating system that runs on my phone. So it could be Google, who's running the Android operating system, for example. And if it is that person who's checking the face through Face ID, for example, on an iPhone, or checking the fingerprint through I think it's called Touch ID, then to what extent is that an outsourcing of part or all of the performance of SCA by the payer's PSP, which is his legal obligation under PSD2, will remain his legal obligation under the PSR. To what extent did the payer's PSP delegate/outsource the performance of SCA to somebody else who's checking the face, checking the fingerprint, and whether or not we should require those 4,000 banks, for example, that I mentioned earlier, to all enter into individual outsourcing agreement with Apple and Google, which is going to be quite an adventure, I think. So that provision was there essentially in the PSL proposal, but I understand that some people are now saying, well, that would be absolutely crazy to force 4,000 payers PSPs in Europe to enter into 4,000 outsourcing. Well, I guess 8,000 outsourcing agreements, 4,000 with Apple, 4,000 with Google, or for the performance of SCA. So I understand that this one is still a little bit up in the air.
Yeah, absolutely. I think I suppose there's added politics in bringing in Apple and Google into the regulatory framework, kind of similar to what's happening with the fraud requirements. There's this big debate at the moment about whether social media firms should be liable, I guess, for fraud that's happening. And in some ways, it seems very common sense, certainly to the banks. And there's been such a big campaign in the UK for that to happen. But at the same time, very, very geopolitical. And I don't know if the Commission or the UK would want to upset the governments of places where these companies are from at the moment. So yeah, something to keep an eye on as these texts get completed. I know.
Maybe just to jump into that one, because it's a really interesting one. It's actually something that came up last week at the EMSA annual conference, and where there was a consensus that fraud isn't just a payment. A payment is just one of the aspects of the fraud. It starts on social media, it starts on telco, and there is this consensus that there should be a level of responsibility there. The challenge associated to that is less political, but more operational. Because who's going to provide that oversight, right? If you have some joint liability between, on one side, a payment service user, payment service provider, as well as social media firms, well, who's going to provide that oversight? National banks aren't going to provide oversight over social media firms. Telco oversight organizations certainly aren't going to provide oversight over financial institutions. So today there is no operational organization that could provide that end-to-end oversight over fraud and be able to arbitrate of whose responsibility starts and ends where and who's liable for what. So I think there's a willingness and understanding, and even a political willingness, to kind of add some responsibility to social media firms. But do you put that in a piece of regulation called the Payment Services Directive?
Great stuff for lawyers, I would argue, but
yeah, I think the managing director of the Payment Systems Regulator made a similar point the other week about this, like kind of gave his endorsement to it, but at the same time said, I don't know if we're the right ones to be able to take this forward. So it does seem to be a thing that regulators are acknowledging, at least at the moment. I was going to move on to some of the audience questions that we've got just before the end of the webinar. So one, and this is one that seems to come up a lot when it comes to EU regulation, and I can imagine, Scott, you probably had this quite a few times now, but are there any updates on when this is likely to be passed?
The honest answer is I don't know. All I can do is repeat what I've heard from others, from clients and from colleagues and stuff, that apparently the Polish presidency is trying to make a big push before the end of their presidency, which I think is the end of June. And therefore, they're hoping to basically finalize the discussions on all the burning topics, like the wallets, like more transparency on the card scheme fees, like who's liable for fraud, in what particular scenario should we make sure the payer is always protected, and therefore his PSP should always give him back the money, including in case of social engineering, etc., etc. So they're hoping to basically iron out the discussions in the council by the end of June, so that it's only basically rubber stamping in Q3 and or Q4 of this year, hoping for formal adoption of the PSR and PSD3 text by the end of this calendar year under the Danish presidency, I believe. So that's what I've heard in terms of timing. Now, I don't know if you've heard the same, if it's realistic, but I'm just repeating what I've heard, basically.
So that's what I heard last week as well, is that there's a big push to finalize as many things as possible under the current presidency, for it just to be a formalization for the next one. Now, that being said, due to the geopolitical context, there are other topics that are getting somewhat higher priority. So there's also a limited capacity issue. But again, payments are fundamental to our infrastructure. So we'll see how that balances out against other topics such as defense and whatnot. So, yeah.
Absolutely. And another subject that may not be that much priority for politicians at the moment, but what is happening with FIDA? Obviously, there was the issues earlier this year where it seemed like it was being ditched, but then actually didn't get ditched in the end. So, yeah, where do we go from now with the Open Finance Framework?
So the latest I've heard on the FIDA proposal is that, as you mentioned, so FIDA was almost euthanized a couple of months ago, I think it was now. But apparently there's been a trilogue meeting nonetheless, because obviously we had the FIDA proposal, then we had proposed changes suggested by the Parliament, the Council. Formally, they had opened the trilogue discussions before the Commission said, well, let's essentially pull the plug on FIDA, and then at the last minute they said, well, actually, let's not kill it now. Let's keep it alive, at least for a while. And apparently during the last trialogue meeting, the Commission was formally told, well, please go back to the drawing board and prepare version 2.0 of your FIDA proposal. So that's what I heard happened during the last trialogue meeting. So I can only assume that the Commission at the moment is working on track changing the FIDA proposal in order to come up with the second proposal, the FIDA proposal, which would be easier maybe to digest, maybe shorter, maybe easier to understand. Maybe we not go for a big bang approach, i.e. impact all subsectors of the financial services sector in one go, but maybe we go for a phased approach, i.e. do force access to more data to a subset of the financial services sector, then go for a second wave a bit later, third wave, and so on and so forth. So I can only assume that's where we are at the moment, that DG FISMA in practice is track changing the text, probably making a lot of deletions rather than additions, I would think, shortening it. I have no idea when we can expect that revised proposal from FISMA. Quite frankly, I've not heard anything really. So that's all I know. I mean, I don't know how fast or slowly the FIDA heart is still beating. I mean, my guess is because of all the stuff we've talked about, there might be other priorities at the moment. So the patient's not dead, but his heart is not probably beating very fast, I would think, at this stage. So I don't know how active and how with what level of diligence FISMA is working on this revised proposal. So I really have no clue as to when we can expect a revised text, to be quite frank.
Nice. I think with FIDA, it's definitely
you might do, Jimmie. I don't know if you know more, by the way, than I do.
I mean, I've heard something similar, to be honest. People expecting it not to be necessarily a priority. One thing that's also come up with FIDA is that people feel like I've noticed some trade associations in the member states starting to protest about it and say, we don't know if this is really worth the money that it's going to cost and stuff. So I wonder if those voices are going to get slightly louder in the coming years, especially at the same time as all the other things that are being expected of banks and also payments firms. So there's a lot to be considered at the moment.
And again, if you come back to this topic of, I mean, we want less big European companies in Europe. Who might be the big beneficiaries of FIDA? I mean, I think there's a big chance that the big winners of FIDA proposal might be the Metas, the Googles, the Apples, potentially, who will have all the resources to get authorized as a financial information service provider, a FISP and a FIDA, which is very easy, and then potentially suck up all the data from my insurance contracts, from my accounts at my banks, my financial services investments, my payment services, and the open banking framework, etc. So arguably, those companies might potentially be the big winners of the FIDA proposal. Those companies that will be able to put their hands on even more data than they currently have about me today. So, and if that is true, then maybe that's another reason why we should. Well, some people might think that we should put FIDA maybe on the back burner at the moment because it might help those big US companies get even more traction in Europe, if you like.
Absolutely. Yeah, it's a very interesting area. And I'm sure we'll probably be able to do a webinar on that in the future as well. So thank you so much, guys, for agreeing to speak today. I think it's been a very interesting discussion and plenty has been able to come up, which is great. I'm sure we'll have more to say on PSD3 and PSR once the Polish presidency makes those finalizations, and hopefully we start to see things get agreed later this year. But yeah, Scott, Kjeld, it's been fantastic to speak, and yeah, look forward to the next one.
Thanks very much. It's been great fun. Talk to you next time.
Thank you, Jimmie.
Bye for now.
Bye.
Thank you, Jimmie. Thank you to our speakers. And finally, thank you for attending today's session. As mentioned at the start of the broadcast, this webinar was recorded and a video will be sent out to all attendees in the coming days. If you ask a question during the broadcast that was not answered, a member of the Vixio team will look to get back to you with a reply in the coming days. And finally, if you have any questions about anything discussed in today's webinar or like further information on Vixio, please email info@vixio.com or visit the website vixio.com for more information. Thank you for attending today's webinar.